Good evening and welcome to Credit Talk. This is a live call-in television show. For the next half hour, we will be talking about credit and legal issues. And we are very fortunate tonight to have very special guest Michael Gunderson, attorney at law, with us tonight. And Michael, will you tell our viewing audience a little bit about yourself and how long have you been doing this lawyer stuff for?
Thanks, Todd. Mike Gunderson. I work for the Gunderson Law Firm in Chicago's Roscoe Village neighborhood. I've been practicing law in Illinois for just over 10 years, helping consumers in areas such as real estate and bankruptcy. I've had a long relationship with you, Todd, and
Yes.
We've had an opportunity to help a lot of Chicagoland residents with a variety of legal and credit issues.
Exactly. So Michael has, when people call the help center and there's issues, for instance, there's an item on their credit report and it won't come off and they've disputed it, then we turn those people over to Michael and then he'll go after either the collection agency or the credit bureau as well. Also, Michael's firm has assisted many of our people from the help center with, unfortunately, if there's a bankruptcy, they will assist them in doing the bankruptcy. You've helped people with real estate, closings, and various types of things. So, Mike, I've put together a little presentation, and I'd like to kind of ask you some questions
I'd love
for
it.
our viewing audience. And by the way, this is a live call-in show, so if you have any questions regarding credit repair, bankruptcy, real estate, law stuff, give us a call at 312-738-1060. The lines do fill up quick, so call in now and get in line. All right, so let's go to our presentation. So we have a special edition of the news. It is the Credit Talk News that we've put together. Okay, Mike, how bad will a foreclosure hurt my credit?
All right, so one of the issues with a foreclosure, it's kind of a two-part process. The first step in going through a foreclosure is being late on your mortgage. And as you likely know, every time you hit a benchmark 30, 60, 90 days late on a mortgage, it's a big deal. It's very detrimental to your credit score. Each of those late marks will have an effect on the score. So by the time you've gotten to the point where they've actually initiated a foreclosure lawsuit, your score has already most likely taken a substantial hit. At the point where you're 2-3 years into a foreclosure case in Cook County, the cases still do take 2 to 3 years to get through the normal course of action. Your credit is likely taking the biggest hit. The very end of the foreclosure, when you get a judgment of foreclosure and then a foreclosure sale, that's the final black mark on the credit score that makes it difficult to qualify, at least in the short term, for new debt, new mortgages, etc. So by the time someone possibly loses their home to foreclosure, they've already suffered the brunt of the credit score decreasing.
And what we see on the credit reports when the foreclosure is started, or what happens basically, why are you in foreclosure? Because you're not making payments. So what happens is all of a sudden you're going to get dings, 30, 60, 90, 120. Then that 120 days will just keep going and going and going until the property is sold or the foreclosure is over with. And it will also say foreclosure started or then once it's foreclosed. What is the difference, Mike, between a foreclosure and a short sale?
So a foreclosure is the legal process in which a bank or a certain lien holder takes back possession of a piece of property they have an interest on, either for non-payment or other different types of civil issues. A short sale is asking a bank to basically settle a mortgage debt. You're offering the property at market value on the open market. You're getting less than what you owe as an offer, and you're approaching the bank. You say, Wells Fargo, I owe you $400,000. I have an offer for $3 million. After costs, I can get you $260,000. Will you accept this to basically have a full and final settlement?
And do you represent people in short sale matters?
Yes, we do represent people in short sale matters discussing with the bank what's feasible in terms of a final settlement. That helps the homeowner avoid a foreclosure, which is generally a short sale is looked at less severely as a foreclosure, where you saw the intention was to mitigate your losses and settle the debt.
That was going to be my next question. Which one? They're both bad, but which one is worse?
Absolutely, a foreclosure is worse. It's worse in the sense that in the future, it's opportunities to gain new credit. It's looked at as you simply, even if your intention was to try and you couldn't get a short sale done on the credit score where you don't have an explanation, it looks like you may have just walked away or chosen to default, which never helps the case.
And I agree with you 100%. Let's move on to our next question. So how long after bankruptcy or foreclosure can I then buy a property again? We do have a chart here, but you might want to kind of tell people what that is.
I like to, when I do bankruptcy consults and meet with clients, a lot of them throw out, I can't get credit for 10 years, or I can't do this for X amount of years. And the reality is there is no bright line in terms of when you can do something again. If you're purchasing obviously for cash, you can buy property literally any time following a bankruptcy. Right now, I've seen clients who are getting into certain FHA and other loans that have lower credit score requirements as soon as 2 years after a bankruptcy. I have seen 3 years in terms of after a foreclosure. So, to use a good rule of thumb, I'd say the 3-year point is when it would make sense to start looking into property ownership, and really it depends on your lender and the type of loan you're obtaining.
And there are certain guidelines out there, but working with a lot of mortgage brokers and having a lot of mortgage brokers on the show, it's amazing. These banks, some of them will take them 2 years out, or I've seen even 1 year out of it, depending on what the situation is, the down payment, you're probably going to have to put more down, the percentages, but every bank has something different. So if the first bank tells you one thing, maybe go to somebody else. And I'm a big fan of a mortgage broker versus going right directly to the big bank, because a mortgage broker is going to deal with that big bank plus several others. So if bank A isn't the right fit for you, maybe B or C will be the right fit. So that's why I say, especially if you're in situations like that, obviously credit repair is real good for situations like that, and talk to a mortgage broker.
I couldn't agree more on the mortgage broker, especially because a lot of times they have more of an incentive to work for you and your business, whereas in a retail bank, maybe there's a particular hierarchy, it's possibly salaried, things like that. I just find that the brokers work harder for your business. The brokers and the direct lenders both do a very nice job.
I agree, and a lot of times the big banks, and I'm not putting the big banks down because they are great, but seems like they want so much out of you, and
I wouldn't say they're great.
Well, okay.
But that's just my personal opinion.
Right.
I spend my day fighting them, so I don't have many nice things to say, but they are a necessary evil in society.
Right. But they, well, I lost my train of thought, but let's ask my next question for you, Mike. Can I get out of debt without a bankruptcy?
The answer, absolutely. It really comes to be a question of what makes the most sense financially. If you have $30,000 in credit card debt that you are not able to dig out from, but maybe you have steady income, or maybe you have an opportunity to take a lump sum payment, maybe a bonus or a tax return, a lot of times you'll be able to approach a creditor or several creditors and offer a settlement to alleviate yourself from that debt. That is a possibility. The trouble is if you are in severe financial hardship and coming up with that money is not possible, bankruptcy is generally a better and much less expensive opportunity.
And sometimes we see people, I was just talking to somebody the other day at the help center when they called. And by the way, if you need to talk to somebody at our help center, a lot of people don't want to actually do this on TV. The phone number is right behind me at the 773-862-4000. And if you just tuned in, you're watching Credit Talk. I'm Todd Stern. Attorney Michael Gunderson is with us tonight. Our phone number here is 312-738-1060. If you have any questions regarding the law or credit repair, please give us a call now. Let me ask you one other thing here. Oops. We're talking about bankruptcies, and actually I wanted to touch base before you actually answer this question. I have seen people that come to us and they'll have $70,000, $80,000 worth of debt. They're making minimum payments every month. This is going to take, and I tell them, listen, we don't do bankruptcies. We tell these people that, are you going to be able to pay this off? No, I can't. This is all I can pay. Sometimes bankruptcy is the best thing because you're going to get rid of all that debt. If you don't have money in the bank, unfortunately, the bankruptcy courts will allow it. You can't file a bankruptcy if you have $300,000 in cash in your bank account.
Correct.
And a lot of people have actually called us and thanked us after the fact because, they didn't want to, I don't want to do bankruptcy, don't want to do bankruptcy. Well, nobody does, but you want to live too. And the funny thing is, after you file a bankruptcy, some of these credit card companies, there's some out there, that will issue you credit cards. Now, granted, they're small lines, anywhere from $200 to $500 credit limits, but they will raise them again because they know, listen, this guy has no debt. He can't file bankruptcy for another 10 years, so he's a good risk.
It's 8 years actually.
Oh,
so
8 years?
It's 8 years between consumer Chapter 7s. But you make a good point. I tell clients who are weary about filing bankruptcy, I say, your credit report's a lot like the human body. Okay, it's amazing when you treat your body well that it can heal itself. So I say, you're a drinker, you're a smoker. If you stop drinking and smoking, your lungs, they regenerate.
It's a family show here, Mike.
I know, but I'm just saying, it's like, your liver can regenerate, your lungs can regenerate. Your credit is almost like a living, breathing thing, and it can come back, and it can grow, and it can rejuvenate itself. The trick with having a lot of debt is that hurts your score. Being late on debt, that also hurts your score. Bankruptcy is the atom bomb. It blows up everything that is able to be discharged and lets you begin again and lets you grow again. And that is huge. So where you may take 3, 4, 5 years to dig out from debt, if you had looked at the cost and the timing, within 2 years of a bankruptcy, you may be able to get your score back to where it was before with some healthy spending habits and some good attitudes towards credit use and things like that. So it's a question of time and money. Your banks and your lenders are extending you credit because they make money when you swipe and they make money when you pay interest. They want you back in the game. They want you back using their products. And so this is a method of saying, okay, we're going to get everything straightened out for the best of myself, my family, and move forward from there.
So, Michael, the question is, what types of bankruptcies are out there? There's obviously the Chapter 7 and 13. Why don't you explain to our viewing audience, what's the difference between a 7 and a 13?
The two chapters that are predominantly utilized by consumers are Chapter 7 and 13. So bankruptcy code has many different chapters. Okay, Chapter 7 is a liquidation. If you meet certain criteria for income and assets, where you don't make too much money and you don't have too much in terms of assets, you are entitled to eliminate dischargeable debt. What are dischargeable debts? Credit cards, auto loans, mortgages, promissory notes, judgments from certain actions in court. Things that don't go away, unfortunately, student loans, debts incurred by fraud, things of that nature. But if you do qualify for a 7, you're able to eliminate all of those debts. A 13 is a reorganization. Maybe you're trying to catch up on a house, catch up on a car. You just need more time. You're able to make your monthly payments, but maybe you had a loss of income for a 6-month period. You fell behind on the house. All you need is the court to intervene and allow you to catch up by paying your normal monthly payments plus a small portion of what you fell behind. It's a reorganization. It's an opportunity to get things in order and pay to whittle down your debt to a certain percentage depending on income and assets. Those are predominantly for consumers.
And I think it's very important to, maybe sometimes even see 1 or 2 attorneys, because we have talked to several people at the center and we look at their credit report and they're in a Chapter 13 and I'll be like, why are you in a 13? I said, do you own a house? No. Do you have money in the bank? No. I'm like, why'd you file a 13? Correct me if I'm wrong, but some attorneys out there that might not be as whatever, thinking about themselves more, aren't there a lot more fees involved with the 13 for them, or?
Chapter 13 is a case that has what's called a standard no-look fee that can be paid through the court-organized payment plan. Generally, in Illinois, the standard no-look fee is $4,000, which can be paid over time through that. Generally, to use an old President Obama statement, you need a scalpel and not a hatchet to really address someone's debt situation. A Chapter 7, while can be more damaging to your credit, is generally quicker, less expensive, and in the long run gets you back in the game, so to speak, in terms of repairing your credit, where the typical Chapter 13 plan is 5 years, is 60 months.
Right.
So it's important to really take a close look at what you're trying to accomplish and if, the Chapter 13 really does make sense for you.
Yeah, I agree with you 100%, because sometimes I'm like, why are you in this 13? When they really should have been in a 7. And then they'll contact maybe somebody like you and refile.
Correct. Or we convert cases quite often.
Yes,
Yep.
exactly. So, one more question, and I think I can answer this one, and you can chirp in if you like. Does credit repair work? Boost your credit score. You see this all the time. Advertise people. As I've mentioned on the show several times, there are some reputable credit repair companies in Chicago. The best thing to do is Google, Yelp. Look for reviews. Look what other people are saying. I've looked at reviews, and I've looked at just Google credit repair Chicago, and you can see. Look for the guy that's got the most reviews, the best reviews. Make sure they have an actual office. Make sure that they're not doing any upfront fees. They can't say, okay, give me $700 for 1 year. It has to be a month-to-month fee. You can cancel whenever you want. They have to have a contract. It's got to state exactly what they're doing. There's got to be notices of cancellation. So you got to make sure that it is legit. As far as does it work? Yes, it does work. By removing negative information, and as long as you have good open credit, we see scores going up. So it's really important to get rid of that negative information. I always tell people you got to crawl, walk, and run. And if you don't have any open good credit, what can you do when you have bad credit? Because nobody will give you any credit. Well, the best thing to do, secured credit cards. We've discussed that before as well. That's when you're going to put money in a bank. Most of the major large banks do offer it. They're going to give you a credit card, and then you will be able to, say you give them $500, $1,000, that will be your credit limit. You make your charges, you make sure that you pay on time, or I'd say make a charge or two, throw it in the drawer, but bottom line, it's showing up on the credit report. Even after a bankruptcy, that's a good thing to do because you want to establish some good open credit, because down the line when you want to start buying a car or a house, you need open, established credit. So again, if you're interested in that, you can always call us at the center. We can point you in the right direction. But, just go on Google. That's what I always tell people.
It's good, healthy habits along with a look at your credit report on a regular basis that will set you up for the future.
Exactly. So our final thing, what I want to say about this, who are you going to call? My credit score is 524. Help. Who should they call? That's a job for Credit Talk. Again, call us at the Help Center, and we'll be more than happy to point you in the right direction. And
I miss Harold Ramis more
than
anything.
He is a Chicago guy.
He's a Chicago guy, and sad to lose him.
So now what we would like to do is, because I have my Christmas tie on, and Christmas is just a couple days away, all the children probably huddled around the TV right now. Uncle Michael is going to tell us a little Christmas story about credit, and it's so exciting. So go ahead.
Once upon a time, Santa got a new credit card in the mail, and Rudolph was feeling a little naughty, and he took the card and he bought himself a whole mess of reindeer toys.
Uh-oh.
Santa, unaware of these major charges, failed to pay the bill on these reindeer toys. A few months later, when Mrs. Claus started filling out the paperwork to refinance their home at the North Pole, she discovered Santa's credit score had dipped into the 500s.
Oh.
What does this tell you? This tells you keep an eye on your credit report. Be aware of credit accounts you have open. Keep good habits in terms of payments on any account that you have open. Eventually, Santa was able to contact the help center, get some help rectifying a situation. They did refinance the home at the North Pole right before the Fed increased the rate. Janet Yellen tried to ruin Christmas, but she didn't. They got to 3.625%, and they're happy. They didn't have to go with that adjustable rate that the Grinch was trying to get Santa to take. So overall, it was a good idea. It was a good thing that they got done.
If I had a tissue right now, I'd wipe my eye. I mean, that was a good one. Well, let's go to our call. Hello, caller.
Hello.
Hi, how are you?
Hi, I'm good. So I'm calling.
Liked our story.
I just heard the tail end. I apologize.
So do you have a
Sounded good.
plan?
I do. Possibly considering buying a foreclosed property, but I'm not sure. So is there anything you'd recommend as I continue to look into it?
Sure, absolutely. It's a really good question. Foreclosure property. So that's kind of the flip side. That may be acquiring a distressed property at below market rates because of its distressed nature. Those are great investments if you find the right one. Some people buy from the bank, which is known as an REO transaction. Some people buy from the foreclosure auction, and some people buy a short sale. The most important thing is that you have skilled partners on your transaction, realtors, attorneys, obviously title companies involved to protect you, because a lot of times when you have people in financial dire straits, there are other kind of corollary things that come up. Judgments on unpaid credit cards that could be on title, water liens for not paying water bills, PAC taxes, etc. So the most important thing to know when looking at foreclosed properties, just make sure that you're doing your due diligence, you have people on your team that are able to advise you, and if you're able to get over those hurdles and verify everything's okay, those can be tremendous financial opportunities. So do your homework, and it's a good thing to look into.
And I would suggest definitely using a home inspector.
Absolutely.
Before.
That's a very good point.
We've seen and heard stories, and I'm sure you have too. A lot of times when people are foreclosed on homes where they'll live in them for several years, they kind of let them fall apart too, because they don't want to throw any money into it. And I've even seen situations where the homes have been stripped. They take the appliances. I mean, people are desperate. They'll
Copper wire.
They'll sell the stuff, and that happens. Sometimes it could go in your favor because you can get a better bargain on that, but the problem is, too, getting financing on something like that has a kitchen that's torn apart or bathrooms that aren't there. That will give you a problem. Thank you so much for that call. And I would like to add a little bit of a little holiday story, too, about Santa. So it's about before Santa called the help center and got his credit straightened out. The sled was giving him a little bit of problems. So he thought he would go and get one of those newer model ones, one of those fancy ones.
Like the Clausometer 2000?
with the satellite radio, and he needs navigation now, Hands-free, because they don't want to get pulled over for talking. But so he went to the sled dealer, and he had, these dings on his credit, the low credit score. So the Grinch of the lot said, well, I'm going to have to charge you 19% interest rate. Santa said, 19%? Well, that's going to make my payment double. There's nothing I can do. Ha 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 ha. And he said, wait a minute. He goes, I'm going to go back. But luckily he did call us at the help center. And a couple months later, we pointed him in the right direction. He went back to that naughty old Grinch, and he said, pull my credit now, Mr. Grinch. And the Grinch stood there with his chin dropped and didn't know what to do. I guess I'm going to have to give you that 0% financing now.
His heart grew 3 times as big.
That is true.
And it gave him the 0% financing.
Yes, and Santa pulled away, happy in his new sled. The reindeer were tickled silly because, it was about 600 pounds lighter, too.
Oh, my God.
This new aluminum stuff they use versus the old iron sled.
Donner is a complainer, let me tell you. I hear about that all the time.
So the moral of the story, children, is start at a young age. Don't get crazy with those credit cards. When you go to college, they're going to want to stick these cards in you. And you're going to want to go to the bars and spend money and buy drinks for everybody.
I do remember those days.
Yes, but we know what happens. Now, some people are good and they will pay those bills on time. But I've seen a lot of times where they don't pay them on time, and they come out of college, they get a big job, and they get a lot of carrots for that. Let's talk money, we're going to call it carrots now. And then they want to buy a house, or they want to buy a sled of their own. But they can't because they, from some silly little night in Madison, Wisconsin, they got in a little trouble and they bought drinks for everybody, but it was a great 2 hours, right? Is that worth it?
I think a couple fish bowls at Wando's, absolutely.
Exactly. Well, everybody, I do want to thank you for watching the show tonight. We're just about out of time. We want to wish everybody a Merry Christmas and a Happy Hanukkah.
Happy Hanukkah.
Yeah, both on the same day. This is next week is our last show. We have a very, very special show. We have a Credit Talk Kids Edition. So I want all you kids out there, we're going to have 2 special guests. And if you have any children that are interested in watching the show, you're going to get a kid's perspective about credit, what their thoughts are, and how to use it. So until next week, have a great evening, great holiday. Be careful out there. We'll see you then.